you have an investment account and you recently checked it over the past couple of days, you might be a little concerned, and you're not alone.
That's right. And it was another troubling day on Wall Street as markets across the globe reacted to President Trump's tariff announcement that happened Wednesday. WENY Washington correspondent Brendan Scanlon live on Capitol Hill tonight with some advice from a financial advisor. Brendan?
Hey there, Renata and Nick. Good evening. Well, today's stock market drop comes as more countries around the globe begin to retaliate against President Trump's tariffs that were announced on Wednesday. China, one of the United States' largest trading partners, in response announced additional 34% tariffs on all U.S. goods. That news not doing any favors for investors. U.S. stocks plunging again on Friday, following the worst day for the S&P 500 since 2020 and a 1,600-point plunge for the Dow on Thursday. Similar trends on display Friday, giving Democrats some fuel to criticize the Trump administration.
He's playing poker with Americans' livelihoods, with Americans' retirement savings, and with Americans' hard-earned income.
Economists say uncertainty is driving volatility.
Expect very high volatility, and there's going to be some stress. It's going to be a little bit tough waters for the next few weeks.
The administration characterizing it as an adjustment period.
The markets will adjust. Businesses around the world, including in trade and global trade, they just need to know what the rules are. Once they know what the rules are, they will adjust to those rules.
But what does it all mean for short-term and long-term investments?
If it's short-term, you need this next year, 2 years from now, 3 years from now. You should keep it very safe and away from the stock market. But long-term investors see these periods of time as opportunities. They're buying at low prices, theoretically, and hopefully selling it high. I mean, that's the age-old adage of the stock market, right?
Financial advisor Jason Nickerson says it's too early to tell how big an impact these tariffs will have, but adds that dips in the market are not uncommon.
This is what happens. We reach highs. Theoretically, we should have a pullback at some point.
He recommends creating a surplus within your cash flow by either earning more or spending less to help prepare for higher costs.
We can't control what tariffs are in place. We can't control interest rates. We can't control a lot. What we can control is our own budget, our own spending. And if we can insulate ourselves from a lot of these changes, then we'll be in much better shape.
And Renata and Nick, the Dow plunging over 2,200 points today. The broader S&P 500 dropped nearly 6%, and the more tech-heavy NASDAQ composite dropped in total about 12 points between yesterday and today. The NASDAQ now down by 22% since its December high. Reporting live on Capitol Hill for WENY News, I'm Brendan Scanlon. Renata, Nick, back to you.